Hey everyone, DraftKings has made significant progress over the last several years in building the business from an unprofitable growth stock to now generating positive free cash flow. So I thought I'd provide further details into what's going on with DraftKings stock in this video here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the management team saying that they significantly outperformed the initial top and bottom line expectations they provided for 2023. So both the top and bottom line were better than they forecasted for 2023. They grew revenue by 64%, despite the worst stretch of sports outcomes that we have seen as a public company in the fourth quarter. Now, it is a gaming company and the house always wins, but the house doesn't always win as much as it's used to winning. That's what DraftKings is saying here. Like, yeah, we won, but we didn't win as much as we usually win in this case in 2023. So, still 64% year over year growth, very solid. I've never had an issue with DraftKings growth as a increasing company as it's expanding to additional states and additional markets. My trouble with DraftKings has been with the spending on growth. And that DraftKings really got a hold of and really got under control in 2023. And that's what drove the phenomenal results for the company is it was able to deliver growth while controlling costs. Let's look further. So they gained significant market share, including taking the number one position in combined online sportsbook and gross gaming revenue share, iGaming gross revenue share in the US for the third quarter. So they're the leading company in both sportsbook and iGaming. Those are different, right? Sportsbook is like betting on betting on sports outcomes, and then iGaming is like blackjack and things like that. They have more progress on the online sportsbook side of the business than they do in the iGaming. It's been easier for DraftKings to gain access to markets for sportsbook than it has been for iGaming. And I expect that to continue to be the case because states don't have competition for DraftKings as much for online sportsbook as they do for iGaming. Think about your local state. You probably have a brick and mortar casino somewhere in your state, probably multiple brick and mortar casinos somewhere in that state. And so those interests fight against bringing in DraftKings as an iGaming operator into the state. They lobby politicians and they say, if you let DraftKings come into our state, we're going to lose business and we don't want that to happen. And so that's been harder for DraftKings to gain penetration. But with sports gaming, there isn't really entrenched providers of sports gambling in states, right? That's typically offered in the black market out of taxation jurisdictions. So states have been more willing to allow DraftKings to come in as a sports book than they have for allowing DraftKings to come in as an iGaming operator. And I suspect that to continue to be the case going forward for several years. So DraftKings saying that they have superior customer lifetime values and customer acquisition cost, and that's the ultimate competitive advantage, and we have initiatives planned to enhance both in 2024 and beyond. So let me talk a little bit more about both. So customer lifetime value relates to the concept that when you acquire a customer today, that customer is going to spend a certain amount of money with your company for several years into the future. And so that's the lifetime value of that customer. If this customer comes into your business today, and let's say they're 27 years old, they're going to stick around for an average of 20 years or whatever their estimates might be. And every year they're going to spend $100. So 20 years at $100, this customer is going to provide $2,000 of lifetime value for your business. The acquisition cost is how much you have to spend to get that customer. How much you have to spend to get that customer. Now, the bigger you get as a company, And for DraftKings specifically, that customer acquisition cost has been decreasing. One reason is because DraftKings used to have to advertise in or purchase advertising locally in specific jurisdictions, but as it's grown, it can now purchase advertising nationally and get better rates on advertising nationally versus having to go local. And just that has given it an advantage by lowering its customer acquisition cost. And when it's bidding for customers, when it's bidding for advertising, it can bid higher than its competitors because the lifetime value is also higher. So what management is saying here is they have a two-sided advantage in superior customer lifetime values and lower customer acquisition cost because of their broader scale, their larger market share. They're able to advertise nationally versus locally. So that's been supporting DraftKings improving profitability metrics and cash flow metrics, which they have shown evidence that they have done. So this isn't just empty words from the management team. They've actually demonstrated improving profitability, even though they're still losing money on the bottom line. They're making great progress on that front, and they're making great progress in terms of cash flow from operations and free cash flow as they've optimized their customer acquisition. So all that is true what management is saying there. So they go on to explain this, saying that they continue to acquire customers efficiently. They retained customers through a customer-centric and product-focused mindset. Promotional reinvestment for online sportsbook and iGaming improved as our mix of existing versus new customers matured and as we deployed more surgical promotional tactics. External marketing in older states decreased and newer states reached positive contribution faster as more customers joined sooner following the states launched and they were able to pull back on marketing more quickly. And let me zoom out a little bit and provide greater context to this effort. This was one thing that, if you remember, if you were reading my articles, 3 years ago when I was writing articles and I wasn't on YouTube, this was the number one factor I was concerned with in this market. There was such aggressive promotional spending from all the providers in this market that it was hurting the industry overall. You've heard me talk a lot about competition and how hurtful it is to industry-wide profitability. Well, a few years ago, the competitive dynamics in the online sports betting and iGaming industry were extremely negative. Spending on promotional activity was so aggressive, it was harmful, and it was hurting profitability. They were giving offers like, $500 to sign up if you went with DraftKings or other providers as well. So a sign-up bonus, if you deposit $500, they'll match your deposit with $500. But then everyone else was matching that as well. So what customers were able to do was to go to DraftKings, get that sign-up bonus, play until they get that sign-up bonus released, because you have to have a play requirement. And then after they get the bonus, they move on to the other online sportsbook site and play until they get the bonus from that site. And then they just wait because DraftKings and everyone else would send marketing emails to customers that stopped playing saying, hey, if you come back and you deposit again, we'll give you a reload bonus this time. It's not a welcome bonus. It's called a reload bonus. So then the customer would come back, take advantage of that bonus and play until it finished. And by the time they were through with that one, then one of the other providers would send out a bonus as well. So you can see where I'm getting at, where this was just hurting profitability industry-wide. Those tactics have mostly been diminished, if not all but eliminated. You're not seeing that as much from these providers. In fact, some providers left the market altogether. If you recall, the sports streaming company Fubo was trying to launch its own sportsbook, online sportsbook, and it just gave up the effort altogether. It just left the market. So there's been a lot of industry dynamics that's been helpful for DraftKings lately in the last 2 years versus, the 2 years prior, which the industry was in a hurtful competitive dynamic environment. So all of those factors have now turned around and they're working in DraftKings' favor, and that's propelled the company upward here in the last year and a half. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.